All right, and here they come. All right, everyone. Well, welcome. Thank you for joining us today. We do have just a few reminders before we hand it over to our presenters. If you do have any questions throughout the presentation, we encourage you to use the Q&A option located on your menu bar. We may not be able to answer all of your questions during this webinar, but we'll do our best, and we can also answer them offline afterwards. As a reminder that this broadcast is not for CPE credit. Thank you all so much for joining, and let's turn it over to Ashley and Tyler and get started.
Excellent. Thank you, Amy, and welcome everyone to some more exciting discussion around the provider relief funds. So before we kick it off, once again, I am Tyler Bernier. I'm a partner in our Oklahoma City office. And you're probably wondering why I have a fake flower on, and it's because it is so cold and miserable out. I feel like I need to see some actual flowers, and this is the best I can do at this point. So speaking of cold and miserable out, Ashley?
I know, I was just going to say, but how cold is it really in Oklahoma City? So us Fargoans, I think we might have you beat a little bit. But yeah, to introduce myself, I'm Ashley Brandt-Judah, partner in our Fargo, North Dakota office, which is, I don't know what our temperature even is today. I luckily have not gone outside yet, but yes, it's been a miserable week, hoping to I guess, get a bit better here as we head into the weekend. And happy to be with everyone today to talk about the Provider Relief Fund and cover some of the questions that you submitted. So really appreciate everyone doing that because it really helps. And hopefully we've tried to go through and really cover some of the main topics, questions that everyone had. But yes, as you have other questions throughout, please feel free to enter those in the Q&A as well.
Excellent. So to kick it off, I kind of want to start with kind of a shameless plug of who is Eide Bailey, but I think there's a reason for it. So as a firm, we're obviously a CPA firm. So kind of dealing with your general tax, audit, reimbursement type matters. But we are a firm that is over 40 offices across 14 states. And within the healthcare industry, which is our largest industry, we serve clients in the health system market, hospitals, senior living, dental practices, physician practices, et cetera. And why do I bring this up? Besides the shameless plug, there are a lot of you on this call or on this webinar that are from these varying backgrounds, because this program is for so many different people within the healthcare industry. So that being said, a lot of the answers, some of them might be relevant to you, some might not. We're going to try to make this as relevant as possible for as many people as we can. This webinar is going to cover the provider relief funds from HHS, or the Department of Health and Human Services. And we'll probably say PRF a lot. That really means Provider Relief Fund. So that's the first acronym for the day. But with that, I know there's a bunch of questions out there on the PPP program or on a lot of other things. We'll talk about how that interplays with the Provider Relief Fund, but we're not really going to be covering a lot of those details as far as that program or many others. Since we do have such a large practice, we clearly have the ability to answer probably most, if not all, the questions you have. So feel free to reach out to any of us or your Eide Bailey representative, whether it be on those programs, other concerns or needs, etc. So with that, I think we're gonna kick it off. As Ashley said, we had asked when everybody registered to submit questions, and we appreciate that. Given so many of you did submit questions, we're gonna start there, because hopefully what we tried to do was outline a bunch of them that covered as many people as possible. And so we're gonna see how much we can get through today, what we can answer, what we still don't yet know. And hopefully it'll be a fun and exciting, and most importantly, an educational hour. So Ashley, a softball, please tell us everything you know about the Provider Relief Fund program.
How much time do we have? I mean, I thought this was an hour, so maybe we should break it down a little bit more.
All right. So let's start with a lot of the changes that have happened recently are around the reporting, and specifically around the calculation of lost revenue. Kind of a new topic, something that the Provider Relief Fund itself kind of created. And so with those changes, one of the questions we have is, I heard you can calculate lost revenue based on kind of your net income for the year. So are there any other methods I can use? Because I actually have a gain.
Sure. So actually that net income concept was something that came out last September for a while, but has since been changed. And so there are currently 3 different methods that you can use to calculate lost revenue. And so these methods are contained within the reporting guidance that was issued on January 15th. And so it's something, if you haven't downloaded and haven't looked at that reporting guidance, would actually be a great thing to take a look at. But essentially you have right now 3 different methods for calculating the lost revenue. The first one is that you can compare your 2020 calendar patient service revenue to your calendar 2019 patient service revenue. And the reason why I specify calendar year in there is, of course, I know there are a lot of you out there that do not, you operate on a fiscal year end, but they have made very specific, if you're doing that actual to actual comparison, that it does need to be on a calendar year basis. There also can be some nuances on what's included in patient care revenue. So again, that's where just reading through that guidance, I think is good to take a look at. The next methodology that you can use is you can take, again, your 2020 calendar year revenue and compare it to your 2020 budget, as long as your budget was approved prior to March 27th of 2020. And so they're very specific about that, that essentially that budget needs to be approved before that time. But if it has been, then you can do a budget to actual comparison if that works better. And then they have a third step, which is really opens the door, where it says that you can use any reasonable method for calculating your lost revenue. So this would be if you have, you know, something else that you think for whatever reason, a comparison to actual or a comparison to budget just really doesn't work for you, you can certainly look at this third category of other reasonable method. Big thing to keep in mind here is that if you do utilize this method, is that you do need to include an explanation of a description of the method, an explanation as to why it's reasonable. And you also need to specifically establish why the losses were attributable to coronavirus versus attributable to another source. So definitely something to think about, but just keep in mind that if you do decide to essentially create your own method, there will be a bit more work that's involved there.
Excellent. And I guess I probably also should have pointed out, you know, the reason for this webinar was we did one, 2 weeks ago or so now?
I think so, yeah.
Around then. So it was after some of the newest releases of the updated frequently asked questions document. There have not really been any changes since then, which is surprising. This is probably the quietest it's been since I can't remember when. It feels like about a decade ago. So that presentation is recorded. I believe it's out on the Eide Bailey YouTube channel. So for kind of updates on that, definitely go take a look there. A lot of information. This is definitely intended. We got so many questions. We figured we would start working on, you know, all of the other intricate questions that go along with it. So along those lines, Ashley, you kind of mentioned there's a number of people on this that probably have different year ends. So if you aren't a calendar year end and pieces of your budget obviously then likely aren't approved prior to that March 27th date, can you still use that second option or option B to calculate lost revenues?
Great question. And I know that's one we certainly have been hearing a lot. I think the concern with that is that they are very specific about the fact that the budget does need to be completed and approved prior to March 27th. So they haven't really addressed for those non-calendar type year ends and where you clearly didn't have a budget approved for later in the year, what that would look like. At this point, I would probably assume, not to say that you can't do it, but I think that would throw you more into that third bucket, if you will. So I think I would at least start thinking through, if you really do think that your budget is the best comparison, start thinking through those types of things that you need to document as part of that third methodology of using any reasonable method.
Perfect. So now probably one of the most asked, if not the most asked question, do the provider relief funds and the PPP funds need to be included in the lost revenue calculation?
Well, I'm going to take the easy one first. The provider relief funds do not. So because of the fact that you are essentially doing this calculation to determine what you can claim for provider relief funds, you do not need to include those as part of your revenue. So that's the good news. The PPP, that is the, I guess, billion-dollar question that is out there that has been definitely, we've been trying to get clarification on that for a long time. If you would have asked me that question a month ago, I would have said, yes, absolutely. PPP needs to be included in your revenue, needs to be factored in. But there have been a couple of recent changes that HHS has made that actually makes us think that now they're going the other way on this. The first one was when they came out with the January 15th reporting guidance, they actually moved all of the other assistance received, and that includes PPP. They moved that section of the reporting out of the lost revenue section. So it used to be right within the lost revenue, and now they took it out, which initially made us think, well, that's strange. Why did they do that? And then the second piece that actually makes us believe that you may not need to include it now is that there was initially a frequently asked question out on the HHS website that was very clear that said PPP and any other assistance received needs to be included as revenue for your lost revenue calculation. Well, about, I think it was January 28th, that question was taken away. Unfortunately, they didn't just come out and say, no, you don't need to include it, because that would have been amazing and we all would have been happy. But the fact that they took it away and they also changed the reporting guidance is, I guess, giving us a lot of hope that it will not need to be included.
So it's implied, but not yet explicit.
Yes, that would be the best way of saying it. So Tyler, along the lines of lost revenue too, I know we get a lot of questions about really when an organization is calculating their lost revenue, at what type of granular level can they look at it? So does it need to be organization wide? Can you look at it department, by program, et cetera?
So great question, and you're right. I think the requirement right now is really an organizational wide view if you're looking at it from one of the first two methods, as Ashley pointed out earlier. So the first method is comparing last year to this year, or last year to 2019. So 2020 to 2019 for the calendar year, or comparing it to budget. In either case, it's organization-wide. It is your patient care revenue. That's from all payers, all sources, et cetera. So if you look at the reporting requirements, you're going to see that one of the requirements, regardless of what method you use, is you're going to have to report your 2020 patient care revenue by quarter and by major payer, the payers that are defined by HHS. So Medicare A and B, Medicare C, Medicaid, et cetera. Now, if you so choose to look at this third option of other reasonable method, there isn't any guidance around that. So you could look at, okay, we're going to look at certain departments, or we're going to exclude some things. Be very careful, as Ashley said. Not only does this increase the risk of audit, but it pretty clearly states that someone from HHS will be reviewing your methodology. And so you probably have to have some decent understanding of why you're doing that. And it's not just because we can't support the funds otherwise. So I think that's probably the biggest takeaway is if you're using one of the first two, then it's going to be everything. And if you go down that third path, it's really kind of an open, right now, until they provide more guidance, we don't know what that third possibility might look like.
Yeah, absolutely. So do you have any, I guess, suggestions at this point? I know you just said, of course, we don't know what it looks like, but if, say, you're thinking from the provider standpoint, any suggestions you would make on that third, any reasonable method, perhaps some potential things to look at?
Yep. So I think the first thing that I would suggest is figure out if you can include the budget, that option B, and accumulate that information if you can. For sure, accumulate the information so that you could compare 2020 to 2019 actual. And I say that first because that's going to be your base. Those are kind of generally accepted methodologies from HHS, right? So no matter what, you're going to be able to use that. When it comes to this third method, in my mind, you kind of get one shot at it if you choose to take that shot. So it's really looking at what alternatives can you have. There's a lot of questions out there I know about, can we use a different time period? Can we maybe exclude the first couple of months of the year? Can we just look at March and April? Can we exclude certain departments? Can we include some? Can we, how can we slice and dice this? And I think right now we don't know. But what we do know is that we don't know. So I would be prepared. I would try to look and see, what opportunities might be available so that when that reporting portal opens and we know exactly how to submit the information, then you're ready. You're not behind the eight ball. It doesn't mean just because you prepare a calculation showing something that's really what you have to submit. So I do think that there is some value in, especially if you're not fully realizing it through one of the two generally accepted methodologies, that you at least look at what other reasonable method is there. Unfortunately, there isn't going to be a clear method for every organization. I mean, a dental practice is definitely going to experience different impacts than a hospital, for example. And one in California probably is different than one in Oklahoma or one in Georgia. I mean, every different state, location, et cetera, is going to be unique. So I think this question is really one of a facility or individual specific nature. And so look at your own circumstances, look at where you were impacted. And again, at least create that base so that you have something to compare to.
Sure. One other clarification too, Tyler, is I know there are questions often out there about whether gross revenue should be used or net revenue. And then also along the lines of that revenue calculation, I know we've had a couple of questions come in regarding if, say, fundraising, thrift shops, those types of things should be included. Could you touch on those as well?
Yeah, so the guidance is fairly clear when it comes to the revenue side that it should be net revenues, especially if you're on an accrual basis, or gross receipts if you're on a cash basis. It also says you're supposed to be using the basis of accounting that you would normally use for your financial reporting. So if you're using GAAP, then you would use that similar methodology for this reporting of patient care revenue. The definition of patient care revenue, unfortunately, is still a little bit open. There is some guidance in different pieces of the frequently asked questions. So for example, there are some things when you look at the application to phase 3 on what should or should not be included in patient care revenue. So we can look to that as some guidance, but that doesn't necessarily mean that's how this final piece will be required. The couple of things that is out there, first off, for that fundraising or similar type revenues, it should be included if those are for the purpose of patient care. So if you're getting fundraising for patient care, then it should be included. Similarly, settlements from payers. So if you have Medicare settlements, let's say, or Medicaid, if they relate to prior fiscal years, so let's say you had a settlement on a 2017 cost report and it just came through, and because of that, you had a $500,000 impact. You can exclude that because that does not relate to the fiscal years, and that doesn't put you into the third methodology. That's just the calculation of patient care revenue. Mm-hmm. So switching gears a little bit, there are two ways to claim these funds. It's lost revenues. The other side's expenses. So on that expense side, probably the second most asked question that we get. So you're getting all of the frequently
yes.
So can I use this on COVID or retention bonuses?
Yes, definitely. Hear that question a lot. So when you look in the actual reporting guidance where it talks about expenses, bonuses are something that is specifically mentioned within the benefits. But what you want to keep in mind here is that any expenses you need to be able to say are used to prevent, prepare for, or respond to coronavirus. So I think as long as you're able to document whether it's we needed to pay these bonuses to continue to retain our employees in order to continue to respond to coronavirus. Think along those lines. And I think as long as you are able to document how it's attributable to coronavirus, those are certainly things that you can include.
Excellent. Are we able to use the cost of salaried administrative personnel who spent a significant portion of their time with COVID mitigation, with education, procuring PPE, other COVID-related activities? And does it change if you're talking about using hourly individuals?
Yeah, this is a really tough one because, again, going back to what are your true expenses that you have that are attributable to coronavirus? And I know a lot of you out there have said, okay, for example, my CFO is spending almost half of their time on this. Shouldn't we be able to claim those funds? And I think from a salaried employee perspective, if nothing has changed, it might be a bit tough to justify and say, this is really a true above and beyond expense that we have as an organization. Same thing with hourly employees. Again, if you haven't changed your staffing and you're really not incurring any additional expense, what I would really encourage you to think about here is if you have employees that are spending significant additional time, maybe you're still paying those same employees, but are you, say, keeping additional staff on when really your volumes are down because you're spending additional time dealing with this? Because really you can capture some of that cost just from the standpoint of if you say volumes are down and you now have a significantly increased cost per visit for that reason. So that's my way of saying, I think you need to be a bit careful about just trying to completely directly claim those salaries, but try to think a bit outside of the box there and really look at, if we have all these extra people, what really truly is our additional cost, and is there a way to truly capture that additional piece?
So along the lines of payroll, and there being a lot of different distributions out of this, I know that a number of individuals and organizations just got funds in December, or even still getting funds. So if you did just get the funds in December, can you kind of retroactively pay employee salaries, or can you pay them on a prospective basis? Or let's say you already have paid them, can you apply that even though you got the funds afterwards?
And the answer to that is yes. So this is a good thing. HHS has made clear that essentially you can use these payments to identify or to utilize for any lost revenue and expenses that were attributable to coronavirus, even if they happened prior to receiving the funds. Really, the only stipulation that they've thrown out there is they said that they would be that it would be highly unusual to see any expenses incurred prior to January 1 of 2020. But certainly I would say if you had expenses or lost revenue prior to incurring the funds, you can certainly go back and I guess essentially retroactively apply that, if you will.
Okay, staying on the salary side, there is a limit in the terms and conditions. I think a lot of people know about this executive level pay at $197,000. So if that's kind of our limit, can we claim doctor salary, for example, between 100,000 where PPE is and that 197?
You can, but again, I would encourage you to go back and think about the expenses attributable to coronavirus. So if you have salaries that are truly those above and beyond salaries attributable to coronavirus, and you've claimed some through the PPP loan, but you have that additional up to the 197,000, I would say certainly yes, but just make sure that you're meeting that other criteria as well. So also along the lines of expenses, I know we get a lot of questions on whether the funds can be used for COVID testing. Do you have any thoughts on that?
I do. So COVID testing clearly would seem to relate to preventing, preparing for, responding to coronavirus, right? Which is one of the first requirements. So I think that costs associated with that testing clearly do qualify. The piece I think that sometimes is overlooked is you do have to reduce your costs by amounts that are reimbursed or obligated to be reimbursed by another source. So I think you would take your COVID testing costs and you have to look at what are we getting from our payers? What are we billing patients? What are we collecting on it? And if the costs exceed those amounts, then yes, I think that those could be claimable. I do think one point that's sometimes also overlooked is this concept of obligated to be paid. So just because an organization, whether it be any type on this webinar, if they decide that they don't want to bill a payer just because it'd be easier to claim this cost, I think there's risk there because that payer, that patient, whomever is obligated to pay. It is the organization's decision not to bill them. So I think you do run into risks if you are claiming that you're not billing something and just going to claim all the costs. I would also say, I think you look to the FAQ, and I know one of our previous webinars kind of walked through this, where it looked at the kind of a cost per visit for a clinic. This is a prime example because for COVID testing, there's clearly kind of a cost per encounter. And that's going to accumulate and include a lot of different costs. So that's sort of the calculation that I would use is what is that cost? What's our overall cost? And again, reduce it by those amounts paid or obligated to be paid.
Yes. So along those same lines, what about costs with the vaccine and administrative costs specifically relating to administering the vaccine?
Yep. I think honestly, it follows that same concept of what I was just talking about as far as COVID testing. So, there's going to be some pieces where you are getting reimbursement, let's say from your state, or you're getting grants to administer the vaccines, or you are able to bill Blue Cross or whoever it may be. If that's the case, you're going to have to reduce it by those amounts. If not, and you have costs, and I would include the administrative costs. I do think that it is a true cost of care. There's a lot that goes into it besides just the 5 minutes of having the nurse administer a shot. So it would be that cost of administration in total. But again, be careful not to not remember those obligated costs or obligated reimbursement.
Right. That is the tough part, I think, with all of these expenses that we're talking about is it's not, just quite as easy as it's an expense attributable to coronavirus. That there's, of course, that wrench that's in there as well. So along those lines of other sources being obligated to be reimbursed, I know I get a lot of questions specifically on the HRSA uninsured program and wondering, okay, how does that interplay with the HHS provider relief funds, and which one should I be using first, and how does that work?
Okay, so maybe to explain for some what that even is, that uninsured program is kind of under the umbrella of the Provider Relief Fund. It sort of started at a similar time, and it is under the guidance of HHS, and HRSA is an agency under HHS, which are operating both of these programs. So it's one where you could sign up and you could bill for treating COVID patients, and you would get paid at Medicare rates for uninsured patients. So that's why it's called the uninsured program. So if you are treating patients for COVID and you have costs associated with that, but you're getting paid by this uninsured program, again, it's cost less what you're getting reimbursed. So if there is any excess cost because maybe Medicare rates are below your cost, then yeah, that piece could be claimed, but you do still have to do that calculation. I also think the question that we've gotten sometimes is, okay, well, what if I didn't sign up for that program? Can I just not do that and skip it and just claim it all to this? And I don't know if we necessarily have the answer, but I do think you have a risk because HHS clearly identified and created this program for that purpose. And they also put some guidance around and some guidelines around submitting documentation for those claims. You have to bill it like you would normally for a Medicare patient. So you have to submit the record showing they're a COVID patient, that you're actually treating them for that purpose. So skipping that process, like I said before, puts you at risk because arguably somebody else could be obligated to pay that.
I agree. It seems weird because you think, okay, it's somewhat coming from the same place, but it's the documentation requirement piece is what puts me back to that as well. And I know there is an FAQ out there too that specifically says that the uninsured program needs to be claimed first. So I agree with you. I think it's not explicit, but I do think there's definitely an extra level of risk there should providers just decide not to utilize that and claim it all with provider relief funds.
Yeah, it probably also is worth noting that that uninsured program is actually a separate federal program. So it has a what's called a CFDA number. So when you're looking at amounts that you need to report on your schedule of federal awards or your CFA, or determining whether you have expended this $750,000 threshold, that is a separate program. So that's something that you'll need to track. There actually is an online database that shows what has been paid for all organizations. So if you're not even sure that maybe your billing department went and did this and you're not even, you don't even know, you can at least see that. You can't tell what you've received in your fiscal year, but you can tell if you're participating or not.
Mm-hmm. So still along the same line of expenses, I know we had several providers submitted questions surrounding rent expense. And specifically, if say you had to shut down, can you claim the rent expense during that time? Also along the lines of rent expense, there were a few questions about related party rent specifically. So could you just touch on maybe some of the considerations around rent expense?
Yep, so this is another one of those areas where it's hard to just say yes or no. I will say early on, there was verbiage within a number of pieces of the guidance that talked about maintaining healthcare delivery capacity. And as the guidance has continued to change, that verbiage has been removed. So kind of back to one of Ashley's earlier comments on PPP, it'd be nice if they just told us, but instead they pulled it out, which kind of implicitly implies this concept may not be what we thought it was. So if it's just purely rent that you otherwise would have normally needed to pay, it becomes difficult to say that that rent is attributable to coronavirus. That doesn't seem like a cost attributable. Now, I do know of a lot of organizations that have had to rent spaces, temporary locations, or potential permanent in the future locations for testing, for COVID positive patients, for maintaining PPE, all kinds of different reasons. And that rent, I think, could potentially be attributable to coronavirus. because it is something you wouldn't have otherwise done. It is kind of as a result of the pandemic. So in those cases, I think it is something that you could identify. And then kind of on the last piece, the related party, I think it follows the same concept is, just because it's related party, I don't think kicks it out, but if it's something you otherwise normally would have done, I'm not sure that is attributable. Just because you rent a temporary location from a related party, in some of the other FAQs on, like, let's say the phase 3 application, it does allow related party rents. So it comes back to that first question of, is it attributable?
Mm-hmm. Absolutely agree.
So I talked about some temporary locations, which kind of moves us into permanent locations and capital expenditures. So will the PRF qualify for capital equipment purchases? And if so,
yes.
Is it the
yes.
full value or is it just depreciation?
On a positive note, it is the full value. And so this was actually something that has, again, like a lot of things, changed several times. But essentially, there is a frequently asked question out there that specifically addresses this. And as long as your capital purchase, your equipment, whatever it is, was purchased to, again, prevent, prepare for, and respond to coronavirus, you can claim the full amount, not just the depreciated value.
Okay, so some of the people on this call are critical access hospitals or otherwise cost-based reimbursed by certain payers or programs. So if you do have this cost-based reimbursement structure, can you still claim the full amount?
Can we just stick with the first question? I liked my answer better to that one. So yeah, this is a tough one because I know several providers have said, okay, let's just claim the full amount for PRF. Let's not claim the depreciation on the cost report, then we don't have to worry about it. Where I think you run into some trouble there is, again, going back to what Tyler had talked about, is not only the concept of having something reimbursed by another source, but something that another source is obligated to reimburse. So I think in that case, since essentially Medicare is obligated to reimburse that through your cost report, I think it would be a tough position to take there to just say, okay, nope, we're not claiming it over here. We're just using the provider relief funds. I wish it was that way. I mean, it would certainly make reporting it and determining the amount a lot easier, but unfortunately, I think it would certainly be a risky position to not claim it on the cost report.
So along those lines with the critical access hospital, let's say non-capital equipment purchase, just a personal protective equipment. How would you go about handling that when you're going to have to claim those on your cost report and you're going to get paid a piece back?
Yep. So I think the thing there is, it's tough to completely say, but I think you certainly need to look at trying to do some type of estimate of, really what is the piece that really is obligated to be paid by Medicare, and what do we think we are going to be able to get back that way. And so again, whether that's doing an interim cost report, whether that's trying to use historical data, but I think certainly you need to have some type of consideration for that if you're a cost-based reimbursed.
Okay, so back to capital items, because I know that there's a bunch of people that started some capital projects because it truly was attributable to coronavirus. They're trying to respond to this. But the provider relief fund deadline is June 30th to use the funds. So if that project isn't complete by then, can those still be claimed?
That's a tough one. Really, with looking at the reporting and the way it is now, I mean, it essentially talks about lost revenue and expenses through June 30th. And I think going back to your point of either reporting on a cash or an accrual method based on how you're falling, I think it would be pretty tough to assume at this point that you could claim any capital projects that are being completed after June 30th. not probably not probably what everyone wants to hear, because I know that's a big question out there, and people have concerns about getting projects completed in time. But I think that's certainly one where it's an open question, but I think it might be tough to justify claiming anything after that date.
So instead, can you just prepay for the assets or prepay for services, or kind of, you know, expend all those funds on June 29th?
Well, again, I think it goes back to when we're talking about, you know, of course, the cash or accrual basis reporting. So if you're in a true accrual basis reporter, you're not really incurring those expenditures. However, there is a frequently asked question out there that does specifically talk about inventory, and essentially the fact that it's buried within the frequently asked questions that also talk about capital purchases. So they do talk about if you essentially incur costs for inventory, that you can claim all of that. But really there's no other discussion out there about prepayment of other type of things. So again, this is an area I would just be a bit careful about, because while there's not really specific guidance that says you can't, I think, again, there's also not guidance that says that you can. So a bit more of a risk there. All right, so now you made me answer the tough questions. We should talk a bit about transfers of distribution. So switch gears here a bit. I need a little timeout over here. So some of the recent guidance, of course, clarified some items surrounding the transfers of distribution. So just wanted to talk through a few questions on that. First one is, for example, if you have, say, a network of various hospitals that have received payments, and of course, you know, some of the hospitals are doing better, some are struggling more. Are there ways, can you transfer distributions between the different entities? How does that work?
Yep, so some of the recent clarifications to the guidance does allow transfers within related party entities. Basically, you have to have a parent, and in general, they're related party entities. You're gonna have parent with subsidiaries. And when you have that parent organization, that parent can move funds. And it does allow for the movement of targeted distributions on top of general distributions. I think previously we kind of thought just general, and that's actually what it did explicitly state. But the stimulus bill changed that and did allow the transfer of targeted funds. So like you said, some of those rural distributions, those can be moved between related party entities. Something to point out, however, is HHS did specifically note, if you transfer those targeted payments, it will be another one of those red flags where it'll raise your risk of audit. So you'll want to be sure that if you do that, you are definitely having enough support for expenditures or for lost revenue or whatever the purpose is, because it potentially is likely that you'll be looked at a little bit further.
Sure. So what about for organizations where a parent doesn't have, say, 100% ownership or control? So if, for example, I'm a parent and I own a 40% stake in a joint venture, can I allocate any payments to that joint venture?
Excellent question. So the first thing that it talks about is you have to have control of the organization to be able to transfer funds to and from it. So control is generally through a number of different methods, but what it actually said is kind of look at your financial statement treatment. And if you're consolidating that entity into your organization, then you effectively have control because you've already made that assessment. So if you do have that control, if they are a consolidated entity, then you can. If you have less than 100% ownership, however, then the amount you can transfer out of it is limited to your percentage ownership. So for example, if you have a subsidiary that got $100,000, right? Just because I like round numbers, and you own 60% of it, I can do the quick math. You can only pull 60,000 out of that organization. Not really any guidance on how much you can push down to it. And I don't think that there would be that same limitation, but definitely a limitation on how much you can pull out of it. And again, if you don't have control, the guidance seemingly indicates you can't transfer to or from that organization because there isn't that related party relationship.
Sure. And I know the other difficult piece out there when it comes to the transferring of distributions is surrounding the reporting of all of this. And so, you know, the guidance, of course, says that the reporting of the targeted distribution needs to stay with the entity that received it, regardless of where it goes.
Yep.
But how does that work if, say, I'm an entity that transferred my targeted distribution then? Do I then have to report the expenses of the entity I transferred it to, or how does that work?
I don't know. But I think that's got to be a consideration. And I think that's probably why HHS said it'll be a red flag, it'll be a risk. Because right now, what it looks like is you're going to report your organization's numbers. So if your reporting entity is, let's say, a critical access hospital, and you got targeted funds and you sent them out, you're going to still report your lost revenue numbers, your expenses, all of your information. And it doesn't seem like you have any obligation to report somebody else's. They are required, in order to get that transfer, they're required to be eligible to receive the payments anyway. So they probably got something else, whether it be a general payment or some other payment. So they're going to be doing some reporting also. So it's probably important that you make sure they're having enough support on theirs, because if they don't, again, and you get pulled, it's going to kind of come back. And since all the entities are related, you know, I think that's why that transfer is allowed, because it's going to be an organizational risk as a whole. But for now, it seems like you're going to report on your reporting entity only. Mm-hmm. Again, subject to change when that actual portal opens up.
Right. It'll be interesting to see what that looks like, because I know, of course, one of the items specifically being that they want to see is what were those targeted distributions transferred. So maybe, as you're saying, it'll be, okay, we transfer these, so then they'll be able to tie it to that entity. But that's one of those I've been going back and forth in my head on how that will work, and I haven't quite gotten there. I guess we will see.
Yeah, we can speculate and guess, but yeah. So since I brought up reporting and portal and those magic words, and since you are speculating on things, when's that reporting portal opening? And then when's that first round of reporting actually due?
I don't know. Well, what do we know? I guess let's start with what we do know. That sounds better. So essentially, the portal opened for registration. So hopefully everyone saw that. And I would encourage you, if you have not had a chance to go out and take a look and to register for the reporting, if you are required to report. But essentially all HHS has said is that they will be opening the reporting at a later date, and that they will be providing more information on the timeline, as it just has been delayed, is really just the verbiage they've used. So unfortunately, you know, as Tyler said already, it's really been a bit quiet lately as far as them pushing information out. So maybe they're just really working very hard on getting the portal ready. But it would be nice, because I think once we see that, that will hopefully answer some of these questions that we have out there. So keep an eye out for that, definitely.
So who's actually required to report? Are there dollar thresholds, or how do you figure that out?
Yes. So if you received and are keeping, that's a key part there. So if you receive funds and you've sent them back, don't need to worry about it. But if you are keeping more than $10,000, you are required to complete this reporting. And so unfortunately, that's mostly everybody. One thing to keep in mind when we talk about that $10,000, that does not include any funds if you received any of the rural health clinic testing distributions, or if you received any of the skilled nursing facility infection control. So likely if you received those, you still received enough of the other to report, but just always like to point that out, because really this reporting does not encompass those distributions. Also does not encompass the HRSA uninsured program that Tyler was talking about earlier. But yes, $10,000 is your magic number there for needing to complete the reporting.
Perfect. So do we know what information will be required?
we have a pretty good idea. As I had mentioned earlier, if you have not looked at the January 15th reporting guidance that has come out, I would really, really encourage you to do that. And that's something we can even maybe throw a link out there, or we can send it out to everyone afterwards, because it's really about a 5-page document, but just really would encourage everyone to take a read through it. So some of the things that you're going to have to report, a couple of the ones we've already talked about. So you'll have to report your expenses that are attributable to coronavirus. They require those to be broken down between general and administrative and healthcare related expenses. Again, this is one where it's good to look, because the categories are not always intuitive of how you would think they would be broken out. If you received more than $500,000, you even need to break those down a bit further within individual categories. So again, take a look at that. In addition to the expenses, you're going to have to report on your lost revenue that was attributable to coronavirus. But also within there, you know, those are of course the big areas, but there's also some various demographic information. There's some metrics by quarter. One thing I guess I didn't mention in the revenue is, and I think Tyler, you might have alluded to it earlier, was you need to have a breakout by quarter of your revenue by payer. So again, just some more information, just be starting to look at and think of how to pull this information together. You need to show any of your other assistance received, even though we're now thinking it won't have to be, hopefully, fingers crossed, that it won't have to be included in revenue. You will need to still report on what other types of coronavirus assistance you've received. Also, there's some things out there like any interest earned on your provider relief fund money, changes in ownerships, consideration of single audit, et cetera. But long story short, a lot of information even above and beyond the revenue and expenses. So just please take a look at that and start planning.
So when we actually do this report, and we don't know yet fully what's going to be there, but we have some idea, when will we know how much is actually forgiven?
Good question. I don't know. Unfortunately, I guess the analogy that we've been using is it's almost similar to a tax return, where you submit it and you're not necessarily going to get that initial verification, like say you're getting forgiveness on a PPP loan, you know it's forgiven, you're good to go. Essentially, you'll file it, and there is out within the legislation, it does note that HHS is going to have to report to Congress within 3 years on the results of any audits. So the assumption is over a 3-year period, they will be doing some audits of these funds. So you're certainly subject to that, but you unfortunately are probably not going to just get a clear cut, I submitted it and it's approved. Not fun, but. So along those lines of reporting also, I know we get the question a lot of, okay, if I have enough expenses that I don't even need to worry about lost revenue, do I still need to report my lost revenues?
Yes, pretty easy, short answer. So there is a requirement for each of the different categories. So it's not only the expenses and lost revenues, but there's some, as kind of mentioned, some demographic information. There's information on other COVID programs. But yes, you will be required to report those amounts. And if you don't need it, then clearly you'd probably just put in 2020 compared to 2019. You're probably not using a different method. That being said, I think what we have encouraged is take a look at the amounts you're reporting and make sure that you're actually fully reflecting all of your COVID costs and all of your lost revenues. And I say that because there likely are some future phases that'll be paid out. I know there's actually still even some phase 3 funds that people are getting. So along those lines, there may be amounts that you don't even know you've received yet that you would be supporting with historical numbers. Also, any of these items will be subject to audit or kind of risk of take back, right? So someone could come in and say, yeah, we don't think so there or there. We're gonna take this one out. So if it's me, I'm going to include as much COVID related, actually allowable costs And I'm also going to include that lost revenue in that chance that I have some amounts actually cut out. And then I have enough as backup to be able to replace them, because many of you, I guarantee it, have had substantial impacts, probably even more than you've yet put down on paper and tracked.
Mm-hmm. Yes, completely agree on that, because I think while it definitely will add a bit more difficulty to the reporting, I think everyone out there is a bit nervous because of just the uncertainty with some of the guidance. And again, if you have some buffer in there, it just helps if you do have some of those items later that could potentially be excluded. So I'm assuming then, same question with the lost revenues, that you certainly, if you have enough lost revenues, my guess is that you have to report expenses as well.
Correct. Although on the expense side, we don't know yet what it looks like. So under $500,000, you're going to have two numbers you're reporting: general and administrative and healthcare related. So arguably, if you haven't identified anything, you're going to put zeros into those categories. But back to my previous discussion, I would still encourage everybody to track and identify those COVID-related costs, because I do think having your population of costs is important. Again, just in case you are subject to audit or something happens there.
Mm-hmm. Absolutely. So along the lines of trying to capture all these costs, can you remind everyone how much time they have to utilize all the funds, and if they don't utilize the funds by that time frame, what will happen?
Yeah, so there's kind of two deadlines, one of them being an interim one. So the first reporting is due for the year ended December 31st, 2020. That's the one that Ashley was just referencing, that we don't know when that one's due. So awesome. If you fully supported all your funds and you don't get anything extra, then you're done at that point. If you haven't yet, so let's say you got $1 million and you can only support about 800,000. You got 200,000 left. What do? Do you just send it back? Could, but I wouldn't. You have until June 30th, which hasn't happened yet, so there's still time. June 30th of 2021 to expend the rest of the funds, either through expenses or lost revenues during that 6-month period. And you will have to submit a second report. We don't know what that looks like. They have said the due date for now is July 31st on it. And then if you get through that and you still have funds left that you haven't fully supported, then it's expected you'll have to pay those back. But HHS said, just wait and we'll tell you how you do that. So I would not yet worry about paying things back. There hasn't been any indication that there's going to be fines and penalties or other negative impacts as a result of holding on to the funds. And again, you still have time, 4+ months to be able to support the use of funds. So if you think that you're going to be in that situation, I would look to see, are there things that truly you could do to help respond to the pandemic we're in?
Mm-hmm. Absolutely. And are there things that you can do that not only would help now, but will be useful upgrades or things that will help into the future as well?
Yep.
So we of course have talked a lot about the reporting and auditing and all of those things. So can you touch on what type of documentation that providers should be maintaining for expenses and lost revenue? And then also, does this type of documentation need to be submitted to HHS along with the reporting?
So on the first question, I think you should have enough documentation so that when HHS or somebody else comes knocking at your door and is auditing these, that you're able to support them, right? So make sure that you have that available, whether it's your calculations as some of the supported expenditures increase, or you're using other reasonable methods for lost revenues. As those numbers increase and your risk increases, I'd say your documentation and your support should increase. So there's not only should be, invoices, for example, but also explanations as to why they actually are attributable to coronavirus. Because 2 years from now, you may not remember. I would also encourage you to try to tie it to guidance that is issued as you're making these determinations so that you can further strengthen what position you have. None of that information, however, is going to be required to be submitted to HHS. So you're not going to attach invoices. Caveat being, If you choose that third methodology of other revenue, you will be required to submit the calculation, and you will be required to submit your rationale as to why it's reasonable and why it's attributable, why those losses are attributable to coronavirus and not some other source. So keep it, but most of it will not go to HHS. They have indicated through the FAQ that there's a 3-year record retention expectation. So that's what, at a minimum, I would suggest those records be retained for, because if you get audited, it's probably going to be 2-3 years down the road. And again, I don't remember 2 or 3 years ago. This last year has felt like a decade. So who knows?
Right. Agree. And I think the other piece of that, just with, okay, so we all maintain invoices and things, but you have that rationale in your head right now of, okay, why is this used to prevent, prepare for, respond to coronavirus? You've gone through all that whole process, and it might seem simple in your head right now, but again, as Tyler said, 2 years from now, maybe not. So I think as much as you can document those pieces of it, because then if you are subject to audit, whether it's HHS or whether you are required to have a single audit with your auditors, yep. I think just the more of that you can do up front, you're going to make your life way easier down the road.
So as per usual, as we're running out of time, a few final questions here.
Of course.
So are there opportunities for additional funds?
Yes, absolutely. So within the last legislation that was just passed on December 27th, Congress did specifically allocate $3 billion for additional provider relief funds. And so not only, they've essentially said that 85% of that $3 billion plus any funds that have since or that have previously been returned by providers, because there have been some of those, are going to have to be sent out in a specific distribution that's going to be coming through, I guess, as we've been referring to it as the phase 4. But essentially with that, they haven't come out with the exact specifics, but what they have said is that you are going to have to justify the need based on any losses and changes in your expenses during the 4th quarter of 2020 and the 1st quarter of 2021. So they're going to be looking at that, last quarter of 2020, 1st quarter of 2021, and doing some type of calculation based on need. Again, that's the piece that we're not sure on, but I would say if you've continued to have some downturn late in the year, early in 2021, be watching out for the information on that next distribution when it comes out.
So it kind of sounds like the phase 3, but maybe just a little bit of a different focus.
Yep.
So I know we're bumping up against our time, but I do want to at least get this last one out there. So if we are a taxable entity and we got this money, are we going to be taxed on it?
I'm ask you that question.
All right, fine. So the IRS, I'm okay. The IRS did issue a frequently asked question way back months ago that basically said, yes, these are taxable funds. The stimulus bill did not change that. So while it did have some positive impacts on the PPP program, it did not change the Provider Relief Fund program. So it does say, yes, they're taxable. It's expected that the government's actually going to be sending recipients a 1099. So that does create another level of expectation. I do think there's potentially opportunities if you haven't yet earned it to argue for a position for deferral into the period in which you've earned it. But I do think that that's going to definitely have to be an organization by organization determination. There's clearly some risk with it. And it have to be a discussion with your tax professional, of which I am definitely not.
Well, that's what I was going to say. So yes, I think certainly it's that, well, because we've gone back and forth a lot, of course, within our firm on, well, how does that work if, let's say you receive the funds and we know that it says they're taxable, but what if you don't eventually end up spending them and you have to send them back? And so that's where hopefully this deferral methodology, I guess, it seems like it makes sense, but when you're a cash basis taxpayer, I think, when you just look at it on the surface too. So I know we have our tax team looking at that one very closely, and
And they did update, and I think this is kind of, for some organizations, this will help. If you have to pay tax, then that tax expense is an allowable expense towards the program. So arguably, you're not going to have to pay back funds that you also paid taxes on, because you'll be able to claim that. What isn't clear is if you're a pass-through organization or something similar where the actual entity is not paying the tax, that isn't yet clear. But if the organization is paying the tax, then that tax is an allowable expense. So that, again, at least helps on that front, that you're not kind of getting hit with a tax and then have to pay it back, so you're worse off than you were previously.
Yeah, which is still a circular reference in my mind, because then if the payment is then allowable, yeah, it keeps going. But anyway, like you said, I will let the tax team look at that. But yeah, certainly I think good considerations of you certainly need to consider them for tax purposes as they are considered to be taxable.
Well, once again, we appreciate everybody's time. We hope this was helpful. Again, these questions all came from you. I know there were many more submitted in the Q&A box. We tried to address ones as we went along through. We had Braid Schweitzer hanging out in the background, couldn't even see him, but hard at work, accumulating some of those for us. And I know responding to many of you. We also get a report of the questions. We'll try to respond to those that we haven't been able to, but we appreciate it. We hope this helps. We know there's a lot of questions out there. We'll continue to try to put out as much information as we know when we know it, and keep up the good work. Ashley, thanks for your help. Any final last words besides keep warm?
Keep warm and just keep monitoring the guidance. As I said, I think a few of you have maybe asked about the reporting guidelines. So we can get those sent out as well. Again, it's about a 5-page document. So just really encourage everyone, they are always subject to change, just to read through that. That's really going to be some of your best guidance at this point.
Excellent.
All right. Well, thank you all so much. Nope, that's it. So thank you all so much for attending. Thank you, Tyler. Thank you, Ashley. Have a great day, guys.
Thanks.